Hello and welcome to FinextraTV. I'm Alex Lipich, and kindly joining me virtually today is Sovan Shatpathy of Oracle. Sovan, it's great to see you virtually, of course. How are you doing?
I'm doing great, Alex, for a Friday.
Almost the weekend. No, it
Almost.
really is. It really is a pleasure to see you. And today we're going to be discussing the evolution of traditional banking models. Um,
Yeah.
so, considering the rapid evolution of industry development, Sovan, how do you personally see the definition of traditional banking models changing in the future, do you think?
Alex, it's a great question. First and foremost in my mind, the traditional banking models of the past, you're happy to go neighborhood banking in your street corner, which provides a bunch of services. That's rapidly evolving, right? Because if you really start to think about banking, almost everyone wants to own the customer financial well-being, if I may say so, which means that in the business of banking you have retail players, you have media streaming players, you have healthcare players, you have big tech companies. They all are wanting to be part of our financial well-being, including providing you point of sale products, including providing you lending products, providing you deposit products, and much more. So for banks, it really becomes like competition is coming at them from all angles. And one of the main things banks have to do, and they're starting to do, is they're starting to go from like what I would call vertical stovepipe product model into more of customer journey kind of model, right? How do I look at Alex Lepage here and figure out your 360-degree relationship with the bank? Not like, okay, you have a credit card and a mortgage and a this and a that. So that's a big change, product to customer journey. The second one I would say is that, off late, it's not just about branches or physical and digital. I think banks of today are phygital, right? There
Mm.
has to be a seamless and omni-channel experience between your physical channels, which could be a branch or a contact center, and your digital channels, which is like mobile and internet banking and whatever else is going on. I see the third big trend, Alex, I would say is that no interview is complete without mentioning generative AI and AI of late. But to me, for the banks, it's more about from people intensive operation to more of AI augmented operations, right? How do you have human in the loop but take advantage of the rapid advancements of technology and take it to the other side? The
Mm.
last point I would say from an architecture and technology standpoint is banks have historically run on like monolithic setup, right? Think of it as vertical mainframe vaults. Whereas where the world has gone is more of composable architecture, right? More tailored, fit for purpose product. What do I want to do with product catalog? What do I want to do with pricing? What do I want to do with origination or servicing or collection? So that's a big change also going on because that allows you to create impact where it matters most, your customer. And the customer could be a retail customer, could be a transaction banking corporate customer, or could be in investor services for all I care, right? So these are some of the big trends, I would say. I think I answered your question.
You've more than answered my question. You've clearly identified some of the key trends there, and identified also the importance of that customer journey that we keep talking about. Um, so even legacy systems, and even I'd say some modern systems are being challenged at the moment with that need for modernization. Where are some key drivers, or what would you say are some key drivers of success in that transition? Do you think?
Banks or financial institutions, Alex, like I started to hint in my last point, have been built on what I call as monolithic systems of record, right? Big mainframe systems which kind of are churning away your end of the day operations and all of that. And really the journey they need to go on is how do you break down that puzzle into like composable chunks, digestible bites, and then think from the lens of like a tiered play, right? And I'll explain that any customer journey, any play you look inside a bank across corporate, retail, commercial banking, there is a customer layer. Think of it as the last mile connectivity, right? Physical and digital. Then there is like the business process layer where all the workflows are happening. between the banking actors, the support channels, the end actor, and then you have like the system of record where everything is being kind of committed, right? Where do you maintain the fact that you have these products, you have this, that? So historically, in the classic lipstick of pig kind of analogy, there has been some stuff done in the last mile. Everything else is like one concrete block, for lack of a better word. My recommendation and the trends I am seeing in banking globally is that people are starting to address the customer layer with the obsessive focus, right? I talked about omni-channel, seamless, componentized, deconstructed kind of play because you see the impact immediately. But the innovation mostly happens in the product layer. If you think about the customer, product, and the system of record, right? The product layer is where you're defining modern products, where you're defining bundles, where you're defining offers, where you're defining things like relationship based rewards and pricing. And that's where the magic sauce comes in because otherwise, the business model of the past that I'll give you a couple of deposit accounts and couple of term deposit products and I have a credit card and a mortgage and a consumer lending business, that's very passe. So my advice and my recommendation based on my experience dealing with global banks is think of your entire banking ecosystem in the lens of customer, product, and the product processor or the system of record. Address the customer layer, do the innovation in the product layer, then start to address what also is colloquially called as like banking core and how you start to kind of transform the system of systems which run the business of banking, which could be like servicing systems, deposit systems. You start to get the idea. Big credit card processing systems, right? Treasury systems and beyond.
Yeah, I think one of the key terms you use there is innovation, the magic source formula as well. So
Yeah.
I'm sure you'd agree, there's been discussion over whether to progressively modernize or to change everything all at the same time, all at once. What
Yeah.
is your view, Sovan, on the right approach, if you like?
You know, I'm thinking about it, Alex, for a second, right? Your question.
Yeah,
One thing I must say, the world of banking is so vast globally, whether in my home base of US or anywhere, right, in UK or Asia or wherever, you have like smaller institutions like non-banking, like financial services, taking care of people at the bottom end of the spectrum. You have the concepts of like credit unions. You have the concept of community banks, mid-sized banks, super regional banks, and then you have like these mega banks with like assets which are well over $1 trillion and more, right? So to answer your question, I think the banks need to introspect in terms of how big is their business and where they need to go. If you're really on the lower end of the spectrum, more captive, maybe you can look at an approach where you could like transform the ecosystem much more quickly in a, if not big bang, closer to that, right? Within a captive period of 6 to 9 months, you transform your entire ecosystem. But moment you are of certain size, let's say, let's put a line on the sand, $25 billion and above in assets, let's say, right? I
yeah,
really think you have a high velocity of customers and you have to go with the approach which is mostly about progressive transformation, right? Which essentially means that you start to think through in terms of what are the pieces in my ecosystem I can deconstruct first. Goes back to my previous answer of think in terms of customer, product, and the system of record layer, right? And start to pick out like here are the pieces I can take out first and modernize. Have a modern API ecosystem, have a modern data ecosystem so that even if your system of system like the banking cores and the servicing systems stay static for a while, you are doing enough differentiation in your product layer and the customer layer that everyone sees the impact and you get a both top line and bottom line boost if you start to think about it, right? So I think to summarize it, I think progressive transformation is probably the way to go for most. There are different ways to do it. We can talk about it. There is a product led approach, there's a segment led approach, there is a neobank kind of approach. But it really comes down to picking the pieces of the puzzle which will make the most impact. And here is the final answer to this, right? How do you balance change the bank, build the bank, and run the bank initiatives, because these are mission critical infrastructure and a bank can never ever go down, even while you're transforming, right?
Mm, it's
Yeah.
a really fascinating, interesting insight. And Sovan, given that preference you mentioned for progressive transformation, what would you say are some clear examples of progressive approaches that you personally would recommend?
Yeah, Alex, it kind of feeds off where I left off my previous question. So to kind of tee off there, if progressive transformation is the way to go for vast majority of the banking institutions, at a top level, when I said product led approach, let's break it down for a second, right? What it really means is that depending on the type of bank you are, you could be in retail banking where you have term deposits, CDs, and what we call, at least in US, as IRAs, or you have things like savings account, checking accounts, more broadly called as demand deposit, DDAs, right? And then you have mortgage products and consumer lending and credit card. So the product led approach says that, hey, I will set up a alternate greenfield banking ecosystem, completely new, the promised land, which will help me for the next 25 years. And then I'll have a hybrid core strategy, right? Which means that you maintain your legacy infrastructure and legacy banking environment. You also have a equivalent brand new banking core setup, and then you start to move products at a time, right? And some products will be on the legacy, some product will be on the new. The trick is to maintain the state across both of these banking cores, and that's probably the approach majority of the medium to big to the mega banks will take. It can take them 3 to 5 to even 7 years, but it's a journey well done, because you are keeping your run the bank and your customer centricity at the center of it, right? Now the second approach is more of a more of a domain led approach, where you say that, okay, I have servicing as a domain, right? If you think about it, you could be servicing a credit card, you could be servicing a mortgage product, you could be servicing a trade finance product on the corporate banking side, right? Or it could be something around collateral management in the world of cash management and corporate banking. So you look at the segment and say that servicing as a domain is now split across 6 different systems. Let me take the servicing piece and modernize that, right? So it could cut across multiple products as a horizontal rather than product verticals which you're migrating, right? That's a more complex approach, to be honest, but some banks tried. Then the third approach is a neobank or a new market segment kind of approach, right? Where some are saying, you know what, I have what I have. I want to build a completely a promised land in Mars, a new digital bank or otherwise, and I'm going to build it completely different, which is not necessarily talking other than maybe very light touch of like, okay, Alex, the customer, both my legacy ecosystem and my promised digital only ecosystem knows about it, and I build it. So that the market or segment led approach is when you're building a completely brand new neobank or a digital bank, or in mega banks case, they say that, you know what, now I want to expand into Latin America and I have no operations there. I'll build that completely on the promised infrastructure and architecture. And then over a period of time, I'll bring my home base of, let's say, or I don't know, Americas and Western Europe and UK onto that, right? So that becomes the market led approach, which is more of a business driven approach. But if I were to summarize it between product led, domain led, and market led or neobank kind of approach, I am personally seeing the biggest uptake on the progressive transformation approach coupled with the product led approach, because that actually ultimately in that 3 to 5 year kind of horizon completely transforms the bank without breaking the sanctity of what it is. Because honestly, Alex, at the end of the day, banking is a trust based business with
Mhm.
security wrapped around it, right? And it takes decades to build trust, it takes 1 second to lose it, right?
Right.
And I think banks need to obsess about it and continue to provide customer differentiation in something which really, really matters to everyone across the world.
I think a lot of people would agree with what you said there, trust being at the foundation of everything, really. But it sounds like it's an exciting time. So, and a lot of a lot happening, a lot of transformations taking place, of course. So it'll be really interesting to see how things develop moving forwards. I just want to thank you so much for your time speaking with us virtually today. It's been an absolute pleasure.
Pleasure is mine too, Alex, and I hope people who listen benefit from this and at least get some ideas to spark the thinking. And
I'm
it's a
sure they will.
great time to be in the world of banking and technology. So, more power to all of us.
Thank
Thank
you
you
ever
very
so
much.
much. Thank you.
Cheers.